Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as futures, options, and just investment goals in general. If you're new to the channel, welcome. To give you a little bit of background on what we're doing here, I've been experimenting with high yield strategies for almost 2 years, and I have constructed what I call an all weather high yield portfolio, which I've named Cash Flow Life here. I have owned hundreds of different high yield ETFs, closed end funds, what have you. And I've narrowed it down to just a handful, about 15 to 20 of my favorites at the moment. Please hit like and subscribe. The only way I can keep this channel going and making more videos is to have your support. It is much appreciated. And please know that nothing here is investment advice, not now, not ever. So please make your own investment decisions. Even though I was a financial advisor at one time, I am not responsible for any of your wins. I'm not responsible for any of your losses. So what I wanted to do, I want to just give a portfolio update, where Cash Flow Life stands, the week we just had, a little bit on the week ahead, and go from there. So happy overall with the numbers. Right now, just to give you some updated stats on the current income, we are currently looking at $154,779.97 on a total portfolio value. This is everything I've invested, as well as the margin being used of $635,270. That right now is an overall annualized yield of 24.4%. Like I've said in the past, I typically fall right between that 25 to 30% range. Volatility ticked up a little bit, really ticked up on Monday. Cash Flow Life, what was nice is that it was actually up for the day, right? And I think a lot of it had to do with, again, the puts that I use, the Q puts, the SPY puts, that really hedges my downside, as well as YQQQ, which is an inverse fund that tracks the NASDAQ inversely. It's a high yield ETF that just sells covered puts instead of your longs, which usually sell covered calls. So right now, again, I'm using about $470,000 of my own principal. Like I said, it's significant. It's about a quarter of my net worth, about 20 to 25%. So I take this very seriously. Do I invest across all of my assets, my total net worth this way? Absolutely not. But again, what's the point of Cash Flow Life? It's to pay my bills and maintain and pay down my margin so that I can do what I want to do, avoid the 9 to 5, spend more time with my children, spend more time on my hobbies and things that I actually enjoy doing. So with that said, right now I'm using about 26% margin and about 74% of my own principal. So again, I'm kind of at that higher range of the margin that I usually use that I like to use. I don't like going above that 30%. I like to stay between 10 and 30%. I think, in my opinion, what I found is under 10%, it's really not even worth using it. And over 30%, to me, becomes a little bit more risky. You might, have a different point of view. Love to hear your thoughts on that. But yeah, that 10 to 30% is where I like to stay. So not really making a lot of buys at the moment. Margin buffer is 60.81%. So that is where I want it. I want it above 50%. I did make some changes overall this week. I did sell my Boyle. I had a Boyle call expiring in March. Natural gas had such a huge run this past week that I exercised it, took the profits, which helped pay down the margin a little bit. I am going to stay put with these right now. VXX, USO, the Qs, XLE, and XOM. I think energy will have a good 2026. We've already seen kind of a mini breakout so far. And I think volatility is returning this year. So that's the reason for those. And I think we're due for at least a 20% plus market correction. And I'm a firm believer that we are due for a huge market crash, a generational size market crash that I think has been put off by governments and central banks for the past, 20 years plus. I did also make some changes on the rebalancing. I am going to dollar cost average now back into YBTC. That is going to be a 2% target. So again, I am dollar cost averaging $200 per market day back into SGov all the way down through YBTC. Okay. I am not dollar cost averaging into KYLD, ULT, SALT, or YQQQ. Okay. Those are my high yield plays. I said in a past video that my ULT SALT position, I built a 1-to-1 long short high yield fund that its sole purpose is to pay down and maintain the margin. And then obviously YQQQ, the $60,000 there currently is just a downside hedge for, I guess more minor corrections. So I am going to start dollar cost averaging 2% of that 200 every market day back in YBTC. I also upped IYRI up to 4%. So where did I take that from, right? I took 3% off IGLD. I took 3% off IAUI. Gold is my favorite asset, hands down, right? I would say avoid your biases and things like that. Gold is my favorite asset. It's insurance. It's the one thing that I actually hope goes down. We're sitting at basically $5,000 per ounce. It has had one heck of a run. But gold and silver, I think they're due for a breather. And what I did was I took my gold allocation for that dollar cost average of 20% down to 17%, increasing IYRI by 1% and YBTC making it 2%. So that's just where the trade-off was. So it'll still be a $200 per day allocation, just bringing gold down a little bit and bringing up real estate and Bitcoin. I think from a risk return perspective also, YBTC, I've only got about $10,000 in that position. I'm only making it about a 2% target. So I think with, Bitcoin kind of having it sell off, trying to find traction, some footing here, I like dollar cost averaging back into YBTC now. And since gold has just had a massive run, just paring that back just a little bit. So everything else, happy with the positions. I kept GLDY. It is the highest yielder of the gold position. So again, I want to keep that, as is, making that one just a 10% target. IAUI and IGLD will be 7% between both of them. And then GDXY, I have about a 2% target on that as well. So bringing those down, I will rebalance in March. Okay, that'll be the next rebalance. I'll make a video on that. The Russell just had a good run. It had a kind of a rough ending to the week. Usually in late cycles, the small caps will tend to outperform. The reason for that, there's typically just mass speculation coming back into the markets. Okay, so the CNN Fear and Greed Index, as of this morning when I looked, was at neutral. So I think that, again, this market could go either way. I am betting on lower. I think we need about a 15, 20% correction just to, I think, get out some of this excess. But remember, a 50, 60% sell-off would bring us back to the historical median. Okay, so we are definitely not at low valuations in any way, shape, or form. It's hard to find a lot of value, right? Another thing I wanted to be mindful of also with making a few of these changes was that KYLD, even ULT, they have exposure to a lot of the miners, a lot of the gold and silver miners. So because of that, I didn't mind paring back some of this gold reinvestment either. Okay, so being able to do that, I think, was part of it. If KYLD, ULT do kind of, I guess, lessen their miner exposure across what they're doing right now, get rid of it, whatever, I might, bring my gold allocation back up. If gold sells off, I might, bring it back up as well. So other than that, been really happy overall. QQQI, SPY-I, IAUI, and IYRI all paid their monthly distributions yesterday, more or less in line with where they were for their December distributions. Again, I like NEOS. I like the distribution rates, right? They're all distributing between typically 9 and 15%. Typically, those do fluctuate a little bit, based on market conditions. But again, not eating into the NAV, keeping very stable NAV overall, and moving with the market, especially when it goes up. I was wrong on this week. I thought the markets would be headed down. I thought Monday might have been triggering a downside, but it's just even more worrisome when bankers and politicians can say things and move markets directionally. That's not a sign of a healthy market to be so, day to day, just based on, I think, emotion and headlines. But I do think the data is clear that, yeah, we're due for a significant correction. But again, markets can remain irrational for longer than we can remain solvent. So we want to be very mindful of that, not let our emotions get in the way. But I think this coming week, I think we could start seeing some downside. And if we continue up, hey, all the better, right? Cash Flow Life is going to keep paying. Again, I like to see my QQQ, SPY puts in the red. I like to see YQQQ in the red. That usually means things are, going rather well for the portfolio. So the recurring investment list, we can look at this real quick. Don't want to bore you with this long list, but again, out of the $200 per day that I am reinvesting or dollar cost averaging back into the strategy, here are the updated amounts that I am putting in. WPay is the one that's not on this list because I have to manually do that each and every day, and that's $30 per day. So these numbers here, they do add up to $170, and then I just buy the WPay on my own of $30 every market day. So all in all, good stuff. Again, remember, if you're just starting out investing, if you're trying to build a high yield portfolio, figure out your why. Why are you doing it? My why is I want to live free 9 to 5. I want to spend more time with my kids, travel, hobbies, what have you. But you got to figure out your why. Why are you doing it? Are you just trying to make some side income? Are you trying to leave your job? Are you trying, there's many whys, right? But figure that out first and foremost. I had a good comment from somebody on here who said they want to see a video on if I were to start out with, $5,000 to $10,000 high yield portfolio, what that might look like. So I wasn't sure if they meant $5,000 to $10,000 as starting or $5,000 to $10,000 in annual or monthly income, but I'll try to address all of that on a future video here. Remember, trust God first, rely on the charts, rely on the math, and ignore the nonsense, the politicians and the bankers. Hope you got something from today's video. Have a great day.